Hey everyone, welcome to my channel. Today I want to talk about the differences between real estate and stocks, especially for from the perspective of an investor. Now, as you all know, I love stock trading. I love futures. I like options, and I have a lot of friends that tell me about real estate, or they're into real estate, or they'll tell me horror stories about being a real estate owner. So today I'm going to share some pros and cons of both real estate and stocks, and at the end we'll kind of summarize and talk about differences between the two of them. So with real estate, there's a lot of pros, but I'll start with real estate allows you to have leverage. So with leverage, you can control an asset or own an asset without having all the money to buy it, right? So if you want to buy a $500,000 house, depending on where you live, sometimes you can put down 10%, 3%, depending on where you live, and you can own that house. You can move into a house, live in it, and make your payments towards the mortgage, and it's your property. So, putting down $15,000 or $50,000 to get a $500,000 house, it's great. And the benefit of this is, let's say the property value increases by 10% in 2 years. Your initial investment of $50,000, minus fees, it's roughly around 100% return. You doubled your money. So, that's one way to make money with real estate is just to buy it, live in it, and then sell it for more money. And you get to use leverage. Now, the second pro of real estate is real estate has utility. If buy real estate, you can live in it. You can use it. You can throw a party at your house, at your property. You can run a business from your property. Um, Real estate is something that we all need. Like it, if you're watching this video, you probably have a house or a home that you're renting or something like that. So everybody needs to have a house anyways. So why not own the house you live in, or why not be a landlord? So houses have necessity, have a utility. You can use it for something. It's not just buying a piece of paper. With real estate, you have more control. So if you're an investor in a real estate property and you hate the color of the house, you can paint it. You don't like carpets, you want to have wood flooring, you can change it. With real estate, you have full control of the asset. You can do what you like with it because it's yours. You have a say in it. You have a say so in how it's ran, how it looks, all of that, which is really good. Now, over time, real estate generally does appreciate in value. I'm sure you've all seen houses on like Zillow where 20 years ago somebody bought it for one fourth of what it's selling for today, and that's not uncommon at all. It's very common to see properties just shoot up in value over a couple of decades. So generally, if you're buying a property, you can reasonably expect that it's gonna go up in value over time. And real estate could potentially create cash flow. If become a landlord and you get a tenant, they're paying you every month. So, you have a property, you might have a mortgage on it, but you can take the cash flow from a tenant and literally pay your mortgage and maybe even keep some for yourself. But every month, as this tenant's paying off your mortgage, you're building equity. It's a pretty good situation to be in, and that's the last benefit I could think of. It's you can build equity with real estate. Each time you make your payment towards it each month, you're building up equity into the asset. Now, real estate does have some cons, and it's not all great all the time. I'm going to share those cons now. So, real estate requires upfront capital. It's pretty hard to buy a house with nothing down at all. You also need to have good credit. You need to have income, stable income. So, it's not all great. Like, you need a good amount of money to be able to buy property. The second con of real estate is it has high transaction costs. So typically, when you're buying a property, you're going to have a realtor, a real estate agent, and they're going to be helping you buy. And if you buy a property, they're going to get paid. Um, you know, their fees are basically part of the acquisition of the property. And the same is true for when you're selling a property. Typically, you yourself as a homeowner aren't out looking for buyers for your property. most people would hire a realtor when they're selling a property. The third con about real estate is that it's an illiquid asset, meaning if you get a job next week and you have to move, you have to find a buyer for your property to sell it. You can't just go wake up and say, I want to sell my property today. What's the market rate for it? Pay me that. It's in my bank account the next day. Real estate does not work that way. Real estate, you have to, you know, prepare the property to be sold, market it, find a buyer, hope they get approved, and then sell the property. It's a process. It's not something as simple as going on your computer and clicking the sell button. So, that's not everyone likes that. Also, real estate, you're gonna have maintenance costs. If things go bad in your property, like your heater goes out or you need a new roof, you have to mow the lawn every month. These things cost money over time, and it's gonna add up. So, if you're selling a property, you have to think about how much money did you spend in maintaining the property, deduct that from whatever you gained, and as well as interest payments, right? Um, and most properties, depending on where you live, you're also going to be paying property taxes for your property. So each year you're going to pay your city a percentage of the value of the property. And this is another expense that's money going out of your pocket. And this other point is super important one. So you can build up tons of equity in a property, but if you start missing payments, miss a couple payments, your lender can foreclose the property and take the property back. In that situation, you would lose your down payment, all the payments you've made, and the property. So, you can lose a lot of money if you acquire real estate and then stop making payments for whatever reason. That could happen. And with real estate, there's a higher barrier to entry primarily because of the costs associated. Also, credit could be an issue, and um, it's not as simple as putting away a little bit of money and going and buying something. You tend to need to have a decent amount of money, I think, to buy real estate. So that could be a barrier to a lot of people. Now, uh, I think with real estate, again, the fact that it has utility, it's great, and it's done generally does go up over time. I think it's seen as a safe investment, and also allows you to use leverage in that you're borrowing typically a big chunk of the cost of the asset. So those are the benefits and uh, cons of real estate. I'm gonna go over the pros and cons of stocks now. And when I say stocks, I'm talking about shares, options, futures, etc. Um, with stocks have lots of pros, just as real estate does. And one of the pros of stocks is that it has low transaction cost. Most brokers today, you can buy shares for zero commissions, which is great. Um, and even with options and futures, I mean, sometimes you're paying 50 cents or maybe a dollar or two per buy and sell on futures and options, which is really good. I mean, if you compare it to the percentage of the value of the asset you're buying, it's a pretty good deal, if you ask me. Now, stocks are very liquid. You can buy and you can sell relatively easy. You open up your phone, you go on Robinhood or whoever your broker is, and you can just buy and sell really, most stocks you can buy relatively easy. With stocks, there's no maintenance costs. So, like, if you buy stocks in, a stock in Apple, you're not sending them a payment each month to cover their rent and their other expenses because it's just passive. If you own stock in Apple, you're a passive investor. You, you don't have to do anything, which is great. Stocks, you can use leverage with stocks, and leverage comes in many forms with stocks. You can use margin, which I don't do. You can buy options, and options basically allow you to basically get exposure to um, larger exposure for less money than it would cost you to buy the shares. So like you can buy a single contract, and typically contracts are valued at like 100 shares. Each contract gives you exposure to like up to 100 shares. And now there's something called delta with options, so it's not going to be 1 to 1, but it still gets a lot more exposure than you would by just buying shares, and you could get it for relatively cheap. And then there are futures, which also are levered products. Where I'll give you an example of the S&P E-mini. That the notional value of that is roughly like over $200,000. So if you do the S&P right now is above 4,000, 4,000 times each tick on or each point on the S&P is $50. 4,000 times 50 is $200,000. So you can buy a contract on the S&P for maybe around $10,000 or less than that. So you can have that level of exposure for $6,000, and you could buy and sell when you feel like it. But there are risks that come with that too. It's not just easy as buying it like that. But that's an example. You can get lots of exposure for a little bit of money, the same way you can with a house to the stock market. Um, and it's a passive investment. I mentioned that already. With stocks, you generally just buy it and that's it. You sit, you sit and wait, see what happens. Um, with stocks, once you buy it, they're never gonna come to you and ask you for more money. At least if you're buying shares. If you own shares in the stock, you own it. That's your share. You're not required to make any future payments towards it, like the way you would with the house. Um, Another pro of stocks is that there's a lower barrier to entry. If you get paid and you want to take, $150 or $180 and go buy a share of Apple today, you can do that. You can open your brokerage account, find the stock, and press buy, and that's it. You're a shareholder. So because of that, the ease of just buying, low cost shares, it's very easy to do. That's a pro for a lot of people looking to become started as investors, to where that you don't have to save up tons of money to really buy shares. And with stocks, you get to be more diversified. You can invest in a bunch of different companies, a bunch of different indexes, a bunch of different asset classes. I mean, you can invest in real estate through stocks. So you have lots of options to diversify with real estate, and it would be a lot cheaper to diversify. Um, you know, you have all kinds of ways to do it with the stock market, which I think it's a great benefit. Now, stocks aren't all good. There are some cons as well. Some cons I could think of, and it's a short list, but if there's more you could think of, please add in the comments. But um, stocks also require capital up front. You cannot acquire stocks for free. There's no such thing. You're going to need some money generally to buy stocks. Stocks could be volatile. There are days where I've seen individual stocks up or down 20%. Typically, your house is not going to go up or down that much in a single day. But the stock market, you absolutely could buy a stock and wake up the next day and it's down 20%. That is a thing. Um, but one thing about stocks is they have no utility. So you can't live in your stock. You cannot invite your friends over to your stock. You can't live in your stock. Like, you can't sleep in your stock. It has no utility. You're basically buying the right to something. You're buying the right to future cash flows for a company. So, it's just you're buying a piece of paper effectively, and you don't even get the paper anymore. When you buy it, you're buying a number on the screen that says you own the right to something. And the last con I have about stocks is you have little to no control. When you buy a stock, you can't call the CEO and tell them, "Hey, you should do it this way," or you no. When you buy a stock, you're a passive investor. You have no say. You just have a right to, you know, own a share of the company. That's what you have. You cannot go to an Apple store as an Apple investor and demand a new iPhone as the owner of the company. Absolutely not. So that's the downside. It is what it is. Now, the question of which one is better, it depends. I don't think one is better than the other. I think it's good to have a good mix of both. But I want people to just think differently about investing. Investors typically are drawn to areas where they can get lots of leverage. And real estate definitely is that. You can buy a property with a little bit of money down if you have good credit and income. But I think I believe that in the stock market, you can also, you know, get exposure to the market significantly higher than what you could with the money you have, if you were just buying shares. So, in summary, I'm going to say that there's lots of ways to invest, and you can invest in lots of different asset classes, and access to leverage is not limited to real estate. The benefit of leverage is you can amplify your gains, but you're also amplifying your losses. That's something to consider. The same way you can lose a lot of money in real estate, whether the market tanks or you can't find a tenant or you lose your job for whatever reason, you can also lose significant money in the stock market. If you're long the market and it drops significantly and you're using leverage, your entire position could be wiped out. You could have no equity and lose the position and your money. And I think that's true if you're using leverage. That's always going to be the case with leverage, is that there's significant possibility of losing all your equity. So again, I made this video to just really kind of let you guys know that you shouldn't feel like the only way to access leverage or is through real estate. And the same is true about stocks. Like, stocks is not the only way to use leverage. Leverage comes in many forms in many ways, and I think it's up to the individual to determine what their goals are, what their personality is, what's important to them in an investment. But there's lots of ways to going about it, and I think it's best to just find the one that works for you. Hopefully this video helped you guys to think differently about stocks or real estate. But if you have any questions, please feel free to leave a comment, and don't forget to follow the Twitter and the Instagram. And thanks for watching.